Well, welcome back to Arise Exchange. The markets continue to rebound after huge sell-offs last week over Greece's debt. And this afternoon, corporate earnings results have helped to fuel the surge. However, mixed economic data suggests the economy is struggling to stay on solid ground. Well, global markets expert and best-selling author Ebong Eka joins us by phone from D.C. to help make sense of all of this, hoping it's not a morass. Ebong, welcome to the Exchange.
Thanks for having me, Julian.
You know, the housing market continues to see unstable results, and it's a major indicator on how the economy is doing overall. And I got to ask you, what does this honestly say about where the economy is headed?
Well, it's kind of mixed because new home sales have slumped more than expected, off from a 7-year high. But existing home sales actually have been rather decent based on a few factors.
What are those factors? And, you know, I would think that new home sales would be a big boom, especially now with interest rates down. And I know some say, and I believe it to be the case, that it's hard to get a mortgage these days, but I'm kind of surprised about the new home drops.
Well, that's a very good point. See, part of the issue is this. So with new home sales, with the existing home sales in places like the Northeast, there's been a huge drop because there's not as much inventory. So there are people, the jobs have been doing well. People have more money. People have access to mortgages and access to capital to purchase homes. But in certain places like the Northeast and even also the South, there's not as much inventory for people to purchase. And when you're seeing a new home sales, that is slumping down for a variety of reasons. But one of the main ones is people aren't buying. They're actually focused more on existing home sales than they are on new homes.
Interesting. Look, you know, everybody is holding their breath on this one. The Fed convenes for their policy meeting to consider the timing on the first interest rate increase since before the financial crisis. I don't know if I want this. What should we expect?
We still, from what I've been seeing and from economists as well as a lot of the data, it's still not enough to raise interest rates. I think the Fed is waiting a little bit longer. Well, earlier, like at the end of 2014, a lot of people were concerned. They thought the Fed would raise interest rates sooner, but we're still seeing that things aren't necessarily where they should be because even though we have jobless claims being a lot better, it still is. There's anemic growth in the amount of jobs this last month.
Yeah, you're talking about the number of jobs right now. We talked about this. You heard it on the show earlier. Americans are filing new claims for the first time. Job benefits rose last week, but it's still kind of basically flat. What does that mean for the jobs market?
So, for example, from March to April, non-farm payroll had increased 126,000 new jobs, which is the first time in the last 12 months that it hasn't been at least 200,000. So even that should give you some reason to pause. Now, some economists are basing some of the problems with regards to non-farm payroll on the harsh winter we recently experienced, especially in the Northeast as well as the North.
You know, we're still doing better than, of course, our friends overseas, especially in Europe and Greece, of course, our whole debt situation there. Germany also in the hole because of that holding a lot of it. I've got to ask you, although the dollar is still strong and we're doing well here, how much ultimately will what goes on in Europe affect what goes on in the United States?
It matters with regards to exports. So that also has imports and exports have an effect on our GDP. But if you also look at some other data, manufacturing across the globe has been rather garbage, and people have been actually not really as happy with manufacturing throughout the world as it sits. Now, Europe and the Eurozone are still dealing with issues with Greece as well as how they're going to deal with austerity and debt. But from a U.S. perspective, we're doing really strong right now, and I think that's partially why the Fed is not wanting to raise interest rates.
Well, I got to tell you, let's hope things hold steady, at least here across on this side of the pond, Ebong. And I got to tell you, I'm hoping these interest rates still stay low. A lot of people are holding their breath about that. But anyway, the world-famous Ebong Eka, thank you so much for joining us.
Thank you, Julian.
Okay. Time now for our business ticker. Stories making headlines across the nation and indeed around the world. Deutsche Bank will pay a record $2.5 billion in fines for manipulating interest rates. Penalties were imposed for repeatedly misleading regulators and delaying handing over of evidence. Authorities also ordered the bank to fire 7 employees. Well, Google launches a mobile network that's not such a big surprise, called Project Fi. The tech giant will partner with T-Mobile and Sprint to provide seamless cellular and wireless services. And that will improve coverage for its Nexus 6 users. The base plan costs $20 for talk and text and $10 for a gigabyte of data. That's not bad. Well, the Pentagon is stepping up its fight against hackers by setting up shop in Silicon Valley, of all places. Well, the agency will open an outreach office to attract top talent and identify new technologies. However, tech companies, as I'm sure you know, have been leery of working with the government after the Edward Snowden revelations and consumer backlash over privacy rights. We'll keep our eyes on that one. Can you remember life without all those crazy videos? I can. Anyway, YouTube, which revolutionized online video content, turned 10 years old today. It seems like it's been around a lot longer than that. Anyway, the site gets 1 billion views per month and launched many unknowns to stardom. Sing's Gangnam Style, that's what it is the most popular video with 2 billion views. He's popping all around like a bean or whatever. It's Gangnam Style. Anyway, going for the gold can cost big bucks. That's why the U.S. Olympic Committee has launched an online registry to support Olympic hopefuls. Has it gotten to this? Donors can buy shoes, equipment, and even make car payments. Many Olympians only earn $15,000 a year and don't have corporate sponsors. We got to do something about that. Ahead, financial trouble for future retirees. And of course, you're watching Arise Exchange.